Welcome to another stage analysis video. It is Wednesday the 3rd of April 2024. I'm just going to do a brief midweek video covering what's been going on in the major indexes, some of the short-term breadth and a few other bits. So just want to start with the Nasdaq 100 here, which continues to consolidate in this sideways range, which is starting to show some small distributional characteristics in it. If you drop down to a lower time frame on this, so we go to the intraday time frame here, so you can see some of the Wyckoff characteristics on this base structure. You could obviously argue buying climax, automatic reaction, secondary test. You could argue that was your buying climax area, but nonetheless, we've had an upthrust. We've had some testing now, 3 tests with lower highs, and then we developed this lower line through here, this breakdown level, which we broke through yesterday and then rallied back above again today, but then only to falter back at the past resistance area here from the breakdown line. So you can see this volume level across here, which is the highest volume bar on that area. So if we draw a pivot across there, so rebounded at logical support there, but we do start to see a break through this 1800 area here, then this could start to get a lot more dangerous. Really, it's in a precarious position at the moment. We're looking like a UTAD at the moment, so looking, if it does start to break the 1800 level, then would be expecting a test down to at least the bottom of the range. If we go back to the daily chart there, that will see it drop below the 50-day moving average. Then how it handles that will give us any further information on how it's going. But at the moment, you can see we've been in a short-term uptrend for quite a while. Above that 180R level is what we use to define what a short-term uptrend is generally. So once you start to see the price action start to drop below that level, you can see for a while the majority of the price action was above it, with only a few brief pullbacks below it, for quickly regaining it and moving higher again. So you can see more recently here, it's spent the majority of the time now below that 180R level there. So starting to show a change of behavior in the short term. We've been basing now for a good part of the last month and starting to see those characteristics on the intraday time frame start to show a little bit more distributional characteristics here. So if it does break the 50-day moving average, start to drop down, then there's still a fair way to drop back towards that 200-day moving average, but multiple levels of support along the way. But a major correction normally takes you back 10 to 15% in the Nasdaq, really, so 10 to 11% back to the 200-day currently. So worst case scenario at the moment, potentially a test back towards the 200-day moving average, which would see it hit some major support from where it broke back out down here. So, and then we would see, if we move up to a weekly chart here, that would take it back down to the top of the bar there. It would actually drop below its 30-week moving average, and hence you would have a potential stage 3 developing at that point. But at the moment, still a good chance it could make a continuation. It still hasn't broken, so while there's some signs of distributional characteristics in here, it doesn't mean we couldn't have a sudden sharp change to the upside again and make a further stage 2 continuation. But it's certainly tied in the near term and basing, so we've just got to be a little bit more cautious at the moment. So percentage of stocks above their 20-day moving average has dropped off down to 44% at the moment, so still in the middle range here. And the S&P 500 doing a similar kind of thing. So we've had a little short-term double top, broke below near-term pivot here and attempted to regain it today, but not showing a lot of conviction. So filled the gap, but rolling a little bit here. So again, potential for a pullback. If it starts to break below the 21-day moving average, then the 50-day moving average is your next logical point of support down here. So that would be a pullback of around another 2.5% or so, and a fairly long way back down to the 200-day moving average at the moment. Still another 10%. So major correction again, as with the Nasdaq, would take it back down towards its 200-day moving average. But as with the Nasdaq, could yet make a further continuation. It still hasn't had a major change of behavior as yet. It's a much smaller pullback compared to what we've seen in the Nasdaq, which has been going sideways for for a month or so now. The S&P 500 has shown much more relative strength and is actually the leader at the moment in terms of the major indexes in that regard, but still slight change here back below the +1 ATR level, so just a little bit of caution coming in with 60.8% above their 20-day moving average at the moment. Russell 2000 a bit weaker here, back around its 21-day moving average, so it's dropped right back down to this pivot level, so it's getting some choppy action coming in. Another failed continuation attempt through here, which is now rolled back over again, so getting close to the 50-day moving average again. Line in the sand for this one, probably just below the 200-day, the 200 level here, which is below the 50-day moving average. If it starts to break that, then we would likely see a 200-day moving average test there, but again, could still recover. Trend has not broken yet. It's not a major change of behavior as yet, but there's certainly some caution signs coming in. Gold, on the other hand, is doing the complete opposite. So while the market has been consolidating, gold has been running. So we've seen a breakout to new highs and a further continuation and accelerating to the upside. You can see it's now getting to a fairly extended level in the short term here, above its free ATR level, so 3 times its 21-day ATR here. So getting extended in the short term when it gets to this point. You normally tend to see consolidation, so similar sort of area around here, went sideways for a bit and then has made a continuation. Doesn't mean it's going to top, just likely is just showing some extension, and can, when it's really running, can stay above that level for a while. But once you get to the free ATR level, the majority of the time you tend to see some kind of consolidation in the near term or pullback. You can see relative strength only just breaking the Mansfield zero line here. So if we go to a weekly chart quickly on this one, you can see the stage 2 move that it's had. So over the breaking out to stage 2 back in the latter part of November here, holding, going sideways for a while. So, and then making that continuation breakout and following through with some acceleration. Silver starting to play catch up now. Silver and gold have a very strong correlation to each other throughout history. Silver tends to lag and then tends to overtake gold. So gold, what gold is doing leads, because of its strong correlation to it, leads what silver's doing. But silver has a lot more volatility. So when gold is having a really strong time, the silver and particularly the silver stocks start to catch up and become leverage plays to that, which we've seen over the last few days or so, in the last week or so especially. So highlighted some of those in the watch list in the last week or so as they've started to move again. We've got breakout to new highs today on this. If we go to a weekly chart, you can see that clearing some of the pivot highs from the last few years here. So this is the highest level it's been back since early 2022. We go on to a much longer term chart. You can see that it's actually a relatively small move in terms of silver's history. So these are always interesting to look at the character of something and see how it moves in regards to its own history. So going back to early 1980, just after the rush, where it had another massive spike in the latter part of the 1970s. So I haven't got the data for that on stock charts here, unfortunately. You need a higher subscription for that to go back further than 1980, but it does show, obviously, it's had some huge moves relative to what we're seeing currently. The current move at the moment over the last few months is only about 20% or so. So it's not a huge move. It's been going sideways for a very long time here over the last 3 or 4 years. So, and when it does move, it can move with great strength. So we can see that through the whole 2002 to 2011 period, where it topped out dramatically, and we had a brief run back in 2020 as well there. So at the moment, although short-term extended it seems, it does show from its history that it can be quite explosive. So it's more of it can be very much a momentum play, but there's certainly, even on those explosive moves, you can see there's some extremely large pullbacks along the way if it does start a run. So at the moment, just attempting a breakout. Doesn't mean we're going to get any of these huge moves, but the metals are certainly in favour at the moment, and certainly showing some real strength for the near term. So definitely getting some interest from the market, especially if the market continues to struggle a little bit in the near term. Then that also helps in the metals favour. So we'll see how that develops. WTIC, like crude oil, continuing to move higher, running up towards its 380 ATR level at the moment. It's not quite there yet, but continuing out in early stage 2 again. So I think we're at the moment, if we go to a weekly chart on this one, you can see just briefly attempting to push back out into stage 2 again for the last few weeks or so. So I did have a failed attempt back at the middle part of last year, but even though that was a failed attempt, the oil stocks during this period had some really strong moves. You had 50+% moves in lots of different stocks. So while it was a failed move for crude oil in general and ultimately the stocks, doesn't mean that you can't have good short-term moves when we do get these attempts to move out into stage 2. So we've got a new attempt at the moment. So the energy stocks are currently showing up heavily in the watch lists again, and have been over the last few months or so in a few different periods. They did have a bit of a sideways run after the January. They did start showing up in January once it started to move up and out again through this area, but had a quiet period through here and are now starting to show up again as oil has been pushing higher again. So copper also doing a similar thing. We're seeing new highs on this as well. You can see breaking out again. So new stage 2 breakout recently. So this is the daily chart. So easiest way to look for your stage 2 breakouts, go onto your weekly chart. You can see we've got some levels through here, even the higher level. So this area through here, this is your clear stage 2 breakout point. So 4 weeks now into stage 2 and making a continuation attempt. Relative strength again still below the Mansfield zero line, so these have been underperforming versus the S&P 500, as we can see, until recently. We've only just since February the copper's just started to catch up here. We go back to the oil, you can see just started to catch up in the short term, and go back to silver, same thing, and will be I imagine the same thing with gold, just starting to play catch up here. So while they're strong in the near term, stocks have been stronger for the majority of the period since that November bottom. Okay, let's move on to the percentage of stocks above their various moving averages in the S&P 1500. Still seeing some chop in this. So highlighted at the weekend, it was pushing back towards the highs again, so of the range, and was in a very strong position. I think it was around 80% level with all of these combined. So extremely strong at that point, and hence a little extended in the near term there. Starting to see some volatility again this week. So the short term down the bottom here, percentage above their 20-day moving average. You can see getting much more volatile in the near term here. So although it pushed back up into the upper zone, it's quickly reversed back down again a few times. So we're starting to see a little bit more volatility on the percentage of stocks above their 200-day and 150-day as well. So as before, as I've said in previous videos, we start to see these two in the upper range here start to drop back below this 60% level particularly, then that would be of major concern. But at the moment, still holding up, but certainly an increase in volatility, and thus we signals a bit more caution again. Again, some negative changes in the short-term bullish percent index here. You can see over the last few days the Nasdaq Composite has broken down below its moving averages here, and you can see the NYSE, while broken down, still in a fairly neutral position. So at the moment would give this a neutral / minus in terms of towards the weight of evidence. If we look at the S&P 500 at the top and we look at the NASDAQ 100 at the bottom, they've both turned negative over the last few days, so breaking down below recent pivots. So these two are both on a negative towards the weight of evidence for that. New high, new lows. Now this is the S&P 500 still holding up really well. So as I said, the S&P 500 remains the strongest of the major indexes at the moment. So still 32 net new highs there, whereas the NASDAQ is at a 0 today and had a few days of negative there. So it's actually the weakest it's been since the start of the rally, the secondary rally back at the early part of November. The candle oscillator continues to have violent oscillations both directions, so a lot of chop in this area. So much different to what we've seen previous periods. We've had a choppy period back here in 2022 where it was moving above and below. So but we're seeing some similar chop here. It's not managing to hold either in a negative or a positive, so still a bit of a neutral position with a slight negative bias at the moment. And then the VIX back towards its 200-day moving average. So while it closed back below it today again, still very, very close. So we're in a completely neutral position here, but also a very precarious position. If it does start to break back to this direction, to the upside above its 200-day moving average here, then that would be a major warning signal there. But if it can start to dwindle back this way again, then stocks would be back in favour again. So at the moment, a bit of a neutral position, but as with the other indicators, signs of caution at the moment. Okay, and then just a little final bit on the video. So as I said, this is just doing a short one for the midweek video here. Just wanted to highlight some of the new features again. So you might have seen these pop up. You won't be able to see these today as I turn these back off again for everybody except me, as there was a few little data issues in the ETFs. The ETFs have only updated till Monday. We've got the price data for the week, but the calculations haven't been updating, and the weekly bars haven't been updating. So developers gonna sort that out tomorrow, and then I will turn those back on for you. So we'll have all of the ETFs showing up again. So what we're gonna have is this little table in here at the moment. I'm gonna redesign this whole page once some of the newest features are in and ready to make it easier for you guys to find them. You'll be able to, depending on how it works, I might have some panels that show different bits, so you can quickly access the charts and you can quickly access the various market breadth tools, etc. But at the moment, for the new tools, you want this section over here underneath your subscription. So US market indexes, so you can go to US stocks, which is the entire catalogue at the moment, which has the S&P 1500 stocks, the ETF market summary, which, as I said, is hidden today, but will be back on there again tomorrow. You've got NASDAQ 100, S&P 500, S&P 400 mid caps, and the S&P 600 small caps. So if we show the bell curve, so this is some of the market breadth stuff I was talking about. This, as I said on the weekend video, is going to be color coded. Developers working on getting all of the relative data for these loaded up tomorrow, so hopefully we'll have that finished tomorrow in terms of all of the data in the database and calculated, and then I'll be able to start to make the pages for these. So each one of these bell curves, so this is the sub-industry bell curve, this is the industry bell curve, this is the groups, this is the sectors. So you can see energy is the strongest sector at the moment, then materials, your weakest is real estate at the moment. And then again, this is the same sector chart here. So materials 70.93 at the moment, energy 78.87. So energy is your strongest, which it shows in here, slightly different way. So this is the one I use each week on the sector breadth data. So whether I do it as the bell curve or whether I do it as this, I might use this in a different way and have all of these ones consistent on the pages. But each one of the groups, the sector, the groups, the industry and the sub-industry they have individual pages. So on underneath those they have a table, which lists them all out, has them in order of strength based on the percentages. So at the moment you've got, for example, construction materials, copper, they're on the 100% level, and then down at this end you've got drug and retail, general merchandise, healthcare and technology, they're on the 0% level. So weakest on the left, strongest on the right. And then we'll be having the changes. As I said, they'll be colour coded by sector. One of my members gave me a good idea, which Dorsey does, which is the when it's rising, they have capital letters, and when it's falling, then or falling or neutral, then they just have lowercase letters. So that's a way that you could show it without cluttering up these charts, as obviously there's a lot of data, especially on the sub-industry bell curve. So hopefully get that up and running. Maybe might even have it up and running tomorrow if we're lucky, but we'll see how it goes with what my developer can get done tomorrow. But I'm certainly going to try and get the color coding and all of that done. So, but hopefully we'll have that launched either, like I said, very earliest tomorrow, but it should be within the next week basically. So as it's probably going to take me a few days to put forward, put together the tables and the pages and make sure it's all running properly. So another new feature is these ETF summaries. As I said, not completely up to date. They're only up to date till Monday at the moment because there's a slight bug in the code they're not updating properly since Monday. So just turn these off at the moment, but they should be back up and running again tomorrow again, and then from these you'll be able to see quickly what's going on in some of these major ETFs. There's just a quick snapshot view. I'm going to be expanding the lists to show more, so we'll have equal weighted sectors, we'll have lots more commodities. So all of these also have their own pages as well, so each list has its own page. So I'll be expanding the ETF universe dramatically once we start to get through some of the early sort of bugs at the moment. So just this page is just a quick snapshot view, just so you can quickly look at what's going on in the market, see how strong or how weak various areas are, i.e. natural gas is the weakest and agriculture ultra fund is the strongest at the moment in terms of the commodities shown in this list. As I said, there's more commodities. Cocoa is obviously the strongest at the moment, which the agriculture fund does have. So if I click into that, so since back at this period here, so we go to the crosshair and the chart attributes here, it was back at start of the year in January that started to run. So cocoa has been running the futures dramatically, and I think this is up to this has a 25% position in that, so hence this has had a strong run as well. So that's the ETF summary. So another feature, if we go back to this page here, so the US stocks here, so this one shows you all of these combined basically at the moment. This is the all stocks at the moment. So we come back to this list. All right, this shows them all on a single chart, 16 pages at the moment. There's a few stocks at the bottom here that don't have scores, so if you see any like these, some of these are too young to have a SATA score yet. I'm going to be dealing with that by creating an aggregated score for the younger stocks so that they can start getting data from when they've only got around 5 of the components of the 10, so, and then aggregating that in. So for example, if something's only got 5 data points, then it would be on a 10 at that point. If it's only got 4, it would be on an 8. So that'll give us a way to get some of these younger stocks into the data properly and not just lingering at the bottom of the chart here. So go back to the top of the chart at the moment, so you can see, as I've said before, you just want to see the change in scores. So what's positive, what's negative. You can quickly just flick between this here with the change. You can look at what's the strongest by relative strength. So SMCI, for example, it's only on an 8 at the moment as it's been consolidating. So you can also do by relative strength change, which is another useful way to do this. So this is all based on a 1 week change at the moment. So since last week, so SMTC is currently our strongest relative strength change here than Century Aluminium. So quickly have a look through that. You can see following through from its stage 2 breakout last week, making a continuation move on again some exceptionally good volume here this week. So still staying on a SATA 10 for a second week. Then CENX also running at the moment here. So you can see these are our relative strength leaders at the moment. So another way you can use this data, which I highlighted yesterday on Twitter, maybe if I zoom out a little bit here, you might be able to see a little bit easier. So you can see at the moment here, the oil and gas, over quickly, actually let's just do it by energy. So if I, no, not that one, that's what I want. So you can see here at the moment, energy stocks are dominating at the moment in terms of the maximum SATA scores at the moment. They've been running up, and there's lots of them that have had near-term breakouts in the last few weeks or so. So completely dominated by the oil and gas stocks at the moment at the upper end of the scale. So I talked about this in another video the other day, but another way you can look at the data now is you can quickly go into the code. It's a bit techie for people. We will have a screener in the coming months available. We've already got the screens for that built, and it does work in the terminal. So I'm going to start to get a front end platform for that built out so that you can actually screen the stocks as well as just looking at them through the tables. So at the moment, if you write the console log get ticker SATA plus, you can see how many stocks are currently had a positive. So let me clear this and let me just make this bigger. So if we make this bigger, so if I check by change here, so you can see Para is currently the top here. So if I write console log get ticker SATA plus and then run that, you can see it prints out the list of those 145 stocks in order. So you can quickly copy and paste this into your charting platform, so TradingView, stock charts, whatever. One thing to note with TradingView is that some of the stocks, it will convert them into, sometimes it converts them into other countries' tickers. I tend to find that it favours Indian tickers sometimes for some reason on certain stocks. So sometimes there'll be the odd stock where you will find it's not the ticker you expect and you have to edit that in TradingView. So again, press clear. So another one you can do is the get ticker SATA minus. And you can see all of those. So you can see at the moment there's a lot. 813 this week compared to 145. So basically we've got what, more than four times as many stocks in having a negative technical attributes change this week than they're having a positive technical attributes week. So as I said again, we can clear that out. So you right clear. If we do this in order, so at the moment, 3M is an anomaly this week, so I just wanted to highlight that. So this is 3M is showing as a gap down here. So reason for this is there was a special dividend on the 1st, so it's actually breaking out doing this. But my data provider didn't include the special dividend in their daily dividend update on Monday. So it's actually showing as a gap down. So that's an error. So something I need to change, but I'm not sure how we can change that currently with the way the charts are set up at the moment. So I'm not sure we've got the ability to do it short of manually reloading that data. But so something my developer is going to have to work on as a bit of an edge case there, as that one's standing out as it's out of context here. It's not a -6, it's actually a positive this week. So that's a different one. But as I said, there's a few. Ollie's bargain outlet here breaking down. We come back for you. making a stage 4 breakdown this week. You can see we draw a structure across here. You can see the stage 4 breakdown, breaking below Mansfield 0 line over here, and recent pivots, and then it's got down to a SATA 1 at the moment, so an 8 to a 1 over the course of the last week. So I don't think we've got much in its group at the moment. There's only a single stock in this group at the moment. So this is one of the problems at the moment before the whole US market is loaded, is that we have a few groups where sub-industries where they've only got a single stock. So it gives you a little bit of a distorted picture there on the bell curve. So I was hoping to get all of those loaded this weekend, but there's still a few bugs to sort out before we start to pull in the rest of the US market. So the bell curve at the moment, if we come back to here, we will have this sort of heavy on both sides, where there's some of the groups that have got more stocks, have only got single stock. So not all of these have only got a single stock, but there are a few of these are single stock groups, and hence why they're going from 0% to 100%, whereas your bell curve normally is in you generally only get a few in the 100% and the 0% range. So that will be, as we get the more data in, then that will smooth out, and then we go back to, it will look more like the industry group one here, which has got less in the 100% and less in the 0% range, as these have got more stocks in each of theirs. So as I said, that will change once we've got more data loaded. So right, let's put that back. And I was just going to show a few stocks, some of the current leaders at the moment. So if I go back here, get rid of all these. So you can see here, Vista Energy, CNM, MU, some of the current leaders at the moment. So just as a quick lesson on how to use the charts, we have at the moment hidden features behind the sub-industry. So if you click on the name of the sub-industry, you get a pop-out panel which shows you the rest of the group, shows you the SATA scores and the relative strength score. And if you click on the sector name here, you get the sector. So you can see Vista is currently the leader in its sector. So you can go through all of that. And same with these, CNM, it's in the trading companies and distributors, it's a leader in its group. You can see the exceptional stage 2 move that it's had over the last year or so here, and then also got MU leading at the moment in the Nasdaq 100 as well. So semiconductor materials and equipment, so leading that group as well as the information technology at the moment. So just a few of the features you can use in the charts and on the site at the moment. So getting back to the members dashboard, as I said, this will gradually change. I'm going to be, as I add more features, I'll work out some better ways to lay this all out. My plan was to have a sidebar, still considering that, but I'm not sure in terms of, it does take away some of the page width. So for me, that's a little bit of a concern. So I need to investigate what it looks like on the various different sizes. It is mostly hidden. It was only a small bar down the side of the page here, but that does shift over the page a little bit, but then does let me get in a lot more data into the bar, and we can get various things in. So another way I could do it is through panels on the page, make the dashboard more visual, get the latest posts out of the list view and into a sort of horizontal view like you see when you're on the post pages. So give them a little bit less prominence and give some of these features more prominence at the top of the page. But lots of things to work through with that. At the moment, my focus is just building out some of the core components of the new tools, making sure they're all working properly, and then updating properly each day and fixing any bugs that come up. And then once that's all done, I will expand it, and we'll start to move up to the full US market. We'll get the cryptocurrencies in, we'll get the commodities in, we'll get the ETFs in, and we'll start to look into getting some of the international markets loaded as well. But at the moment, just focusing on getting this sort of perfect for you, and working as well as possible before I start expanding it further. Because the more data you have, the more bugs you find. So it's just doing it in a gradual process to make sure it's all smooth for you. So okay, thanks for watching, guys. I think that'll do for now. I will be back at the weekend with the usual weekend update, the full market update and breadth, etc., and the watch lists. So look out for that. That'll come later on Sunday, and I will see you then.